it's also getting exacerbated for some other Asian markets. Taiwan, for example, is down almost 4%, so there's been no meaningful recovery for most Asian markets in trade this morning. Our Amarnath joins in to talk about all of that. Amarnath, morning. First one word on politics and how important you think that's going to be both for today and over the next few weeks.
Pardon? Mithali, could you just repeat the
politics,
question?
Amarnath, how important?
I didn't get the first part. Yeah, okay. Yeah, I think I've said before also on this channel, I think a year in which markets look to politics and central banks for deliverance on various aspects can't be a good year. I think that's what something I've maintained for the last several months. Having said that, I think a lot of issues where I think there was denial in terms of the market or in terms of the corporate world. I think those factors have got accepted now or digested in terms of possible negative impacts. But I think there are four factors still to play out. I think two domestic and two I would say is possibly global in that sense over the next possibly 3 to 6 months. And from the domestic perspective, I think I would put politics as an important factor in terms of timing of elections and the market then getting concerned about what could be possible electoral outcomes. So that would clearly be one which would overhang and therefore cap any kind of upside. The second issue is, surprisingly, I think what we've seen in the last few months is that for the first time, at least I can think of, that the economists in India are ahead of the curve in terms of predicting that things are going to slow down, whereas the sectoral specialists and analysts have surprisingly not caught up on that. So my sense would be the second domestic factor I would look forward to play out would be possible earnings downgrades post the July result season, which we are just getting into. So I think those would be two domestic factors that possibly could cap upside and possibly see us once again testing into the 12,000 kind of territory.
What do you think will be the mood after this current earnings quarter, Amarnath? Do you think we'll come out of it, feeling that we've got the first knock and more knocks will follow in Q2 and Q3, or will it be a quarter which actually holds up numbers and you'll be kept guessing on whether people are getting it wrong, predicting so much downside?
I think, Udayan, I doubt whether this quarter the guidance or at least the indications, even if there's no formal guidance from corporate India, is going to be as bullish or robust. So I think the rose-tinted spectacles have clearly, glasses have clearly come off. It's now a question of how calibrated the change in guidance is. And I think analysts would definitely have a difficulty in terms of adjusting to the fact that if I'm going to downgrade earnings by 10 to 12%, and the stocks have come off 30-40% from the highs, do I change recommendations or not? So I think that's going to be the greater part of the dilemma. But I think the market would correct a bit to the factor of lowered estimates.
A whole clutch of funds just closed up collections, Amarnath, a couple of days back, and 3 of those 4 funds are actually either fixed income or debt funds. Do you think we're going to start struggling with domestic liquidity as well?
Yeah, I think if I were to take the bear argument, one would say that there are already people who are trying to draw parallels between whatever was the tightening that happened in 97, etc., and what's happening in 2008. I mean, are we going to see something of that? So my sense is that I think there are a lot more positives for India at this point in terms of the strength of bank balance sheets, the leveraging of corporate India. I think the fact that we now have a bulk of our population at a per capita income of about $1,000, which I think is a trigger point for consumption to continue on a sustained way. So I think there are a lot of differences, and I don't think we are going to see that kind of a slowdown or an impact on earnings as happened post 97, 98. But yes, I think we are behind the curve, at least as far as the street is concerned, in terms of tempering numbers a bit. So my sense is that maybe you could, see that talk on the street of, 1,000 rupees Sensex earnings, or, that kind of a number may be coming off by about 10-12%.
What about the bond yield? Amarnath, now that's at 9.23%, and people have now started talking about the possibility of drifting somewhere close to even 10%. Does that change the equation in terms of valuations and how you look at the equity market now?
I think the equity markets is always tend to adjust to things at least 6 to 9 months ahead of the actual events happening. I mean that's what markets are always forward looking to that extent at least. And I think in this case as well, I think the market adjustment has sort of I think it's factored that in. I think now the question that remains unanswered is how long are the high interest rates or the inflation pressures going to sustain? And I think the key to that lies in two global factors. One is clearly oil in terms of how it pans out, particularly through the winter season in the West, which is going to come up in a few months. And the second aspect would clearly be in terms of buffeted by high oil, buffeted by the mortgage meltdown. How is the U.S. consumer going to hold out? So I mean, everyone is waiting for that 6-9 month lag and seeing how much does it impact after that lag. So again, October is important from that perspective. So I think those are the two sort of quote unquote global factors which one would be looking for to pan out. So my sense is that we could again be testing the lows of the year again once more. Till some clarity emerges that how prolonged is the sort of macroeconomic going to be? Is it going to be that we are going to come out of it in another 2-3 quarters, or is it going to be more like 6 quarters?
Any sense of what the offshore money interest is like right now, Amarnath?
I think the offshore money is again everyone is wanting to play the wait and watch game. Thinking that if there is still some money which might want to be taken off the table, and nobody wants to be caught in that selling. So everybody is playing wait and watch. Even if the view is that that maybe specific stocks or opportunities are clearly looking very attractive. I think everyone is sort of keeping the powder dry for bad days or bad weeks. So I think that seems to be the institutional sentiment overseas.
Yeah, we've had plenty of those, haven't we, Amarnath? Thanks as always for stopping by and speaking with us. Still soft for the market, just holding 3,900. Bad day for the broader market. Bad day for Asia, by the way. China's reopened for trade and is now down 0.5%. So in line with the rest of Asia. We're going to take a break and come back.